Good day, everyone, and welcome to the Cintas First Quarter FY21 Earnings Release Conference Call. Today's call is being recorded. At this time, I would like to turn the call over to Mr. Paul Adler, Vice President and Treasurer, Investor Relations. Please go ahead, sir.
Thanks, Shelby. Thank you for joining us. With me is Todd Schneider, President and Chief Executive Officer, and Mike Hansen, Executive Vice President and Chief Financial Officer. We will discuss our first quarter results for fiscal 2022. After our commentary, we'll open the call to questions from analysts. The Private Securities Litigation Reform Act of 1995 provides a safe harbor from civil litigation for forward-looking statements. This conference call contains forward-looking statements that reflect the company's current views as to future events and financial performance. These forward-looking statements are subject to risks and uncertainties which could cause actual results to differ materially from those we may discuss. I refer you to the discussion on these points contained in our most recent filings with the SEC. I'll now turn the call over to Todd.
Thank you, Paul. We are pleased with our start to fiscal 2022. First quarter total revenue grew 8.6%, and diluted earnings per share, or EPS, grew 11.9%. Every business, whether goods producing or services providing, has a need for image, safety, cleanliness, or compliance. Every business has a need Cintas can fulfill to help get them ready for the workday. Our financial results are indicative of our strong value proposition and vast total addressable market. Uniform Rental and Facility Services operating segment revenue was $1.51 billion, compared to $1.39 billion last year. Organic revenue growth was 8.2%. We expected solid growth over year prior period in which the economy was in a weakened state. But we also made solid progress on a sequential basis, and in total, revenue grew stronger than anticipated. We continue to make measured investments to support our growth. The labor market remains challenging. The U.S. still hasn't recovered 5.3 million pre-pandemic jobs. This represents an opportunity for us. Most of our customers are open. However, most are not operating at the same capacity and employment levels as pre-COVID. We are seeing inflationary signs, including higher cost of freight, energy, wages, and supplies. We continue to take actions to minimize the impacts. These include reviewing and challenging our processes and procedures, reduce efficiencies, and reduce costs, in thoughtfully implementing increases to the pricing of certain products and services in response to higher operational costs. Our First Aid and Safety Services operating segment revenue for first quarter was $199.1 million, compared to $204.5 million last year. First quarter revenue was up against a very difficult comparison. In last year's first quarter, in response to the COVID-19 pandemic, personal protective equipment, or PPE, sales were surging, propelling the business to grow organic revenue over 17%. At that time, PPE comprised an outsized percentage of First Aid and Safety Services revenue mix. As discussed on previous earnings calls, the amount of PPE has declined as COVID case counts have fallen from peak levels. However, PPE remains a larger percentage of the revenue mix than it was pre-COVID. Over the same period of time, the recurring First Aid Cabinet Service business revenue has increased. We welcome this shift in mix because First Aid Cabinet Service business is historically higher profit margin business and more consistent. Our Fire Protection Services and Uniform Direct Sale businesses are reported in the All Other segment. All Other revenue was $189.7 million compared to $147.7 million last year. The fire business organic revenue growth rate was 17.8%, and the Uniform Direct Sale business growth rate was 68%. Both businesses benefited in part from increased activity in a period of reduced COVID case counts. Regarding our balance sheet and cash flow, our financial position remains strong. Recently, on September 15th, we paid shareholders $98.8 million in quarterly dividends. The amount per share of common stock paid of 95 cents represents a 26.7% increase of the company's previous quarterly dividend. We continue to allocate capital to improve shareholder return. I am proud of the execution of our employees, whom we call partners. They continue to navigate an unsettled environment by focusing on our customers. The COVID-19 pandemic continues, of course, fueled recently by the surge of the Delta variant. We remain well-positioned headed into the fall and winter months to provide potentially life-saving items such as face masks and gloves, to provide hygienically clean garments such as healthcare scrubs and isolation gowns, and conduct services including hand sanitizer dispensing and sanitizing spray services. Now, before turning the call over to Mike, I want to highlight a recent announcement of our ambition to achieve net zero greenhouse gas emissions by 2050. Cintas was founded on a sustainable business model. Our corporate culture is based on doing what's right and challenging ourselves to improve. We view our ambition to achieve this objective as a natural extension. Also, as part of our steadfast commitment to corporate responsibility, we will soon issue a more robust environmental, social, and governance report. We are committed to protecting the environment, enhancing humanity, and maintaining accountability. I will now turn the call over to Mike.
Thanks, Todd, and good morning. Our fiscal 2022 first quarter revenue was $1.9 billion compared to $1.75 billion in last year's first quarter. The organic revenue growth rate adjusted for acquisitions, divestitures, and foreign currency exchange rate fluctuations was 8.6%. Gross margin for the first quarter of fiscal 22 was $902.8 million compared to $826.2 million in last year's first quarter. Gross margin as a percentage of revenue increased 30 basis points to 47.6% for the first quarter of fiscal 22 compared to 47.3% in the first quarter of fiscal 21. Gross margin percentage by business was 48.3% for uniform rental and facility services, 44.8% for first aid and safety services, 46.1% for fire protection services, and 41.5% for uniform direct sale. Selling and administrative expenses of $508.7 million increased 6.7% compared to last year's first quarter. This increase reflects investments in our sales teams as well as slight incremental travel and meeting expenses, somewhat offset by the sale of assets within our uniform direct sales business. Operating income of $394.1 million increased 12.7%. Operating margin increased 80 basis points to 20.8% in the first quarter of fiscal 22 compared to 20% in the first quarter of fiscal 21. Our effective tax rate on continuing operations for the first quarter of fiscal 22 was 11% compared to 7.8% last year. The tax rate